Next week is a pivotal week in foreign exchange markets with no less than 5 interest rate decisions, the biggest of which is FOMC coming up on Wednesday. And we're heading into this meeting with the overall consensus being that inflation is at risk of re-accelerating. And it's not just economists who believe this, because traders and markets are also fully pricing in one rate hike from the Federal Reserve this year. And going into this meeting, a lot of people are questioning whether the new Fed chair Walsh is going to be dovish based on the fact that this is what President Trump wants. But the reality is, just like in 2022, it's the bond market that ultimately dictates where the Federal Reserve has to go with rates. So for those of you new to the channel, my name is John Fortune. I've been trading financial markets for over 18 years. And in today's video, I'm going to show you exactly why I think the major DXY bullish breakout is still on track, despite the US dollar getting crushed yesterday on the news of a US-Iran ceasefire deal. And I'm also going to share with you my trading plan for next week, including the key buy and sell zones, not just in the US dollar pairs, but also in the top non-US dollar pairs in Forex heading into next week. Okay, so let's kick off with the DXY, because this is the key thing now in Forex, which is setting up. It's this major bullish breakout in the dollar index. We've been tracking this in previous videos, and last week I highlighted the 100.286 as the key breakout spot to look for last week. We came into this level, and where was the US ceasefire announced? It was announced just as we wicked through this level, and this crushed the dollar. I mean, the dollar just reversed pretty much the entire week in a couple of candles here. Now, we have to take a step back and look at the bigger picture here. Yes, we've had the end of the ceasefire agreement. Yes, this has brought weakness into the dollar, but we're still, even on an intra-day time horizon, above the 50-period moving average. In the daily time horizon, we are still making higher highs and higher lows. In the monthly time horizon, we're at the trend line low going all the way back to 2008. And in the weekly, we have this inverse head and shoulders. And fundamentally, we've just seen that the bond market, despite the US president wanting lower rates, the bond market is telling the Federal Reserve they do have to raise rates. And we saw back in 2022 with the gilt crisis, what happens when governments or central banks ignore the market. It can cause a currency crisis. So despite the wishes of the US president, it is a fundamentally bullish backdrop for the US dollar. And with FOMC coming up this Wednesday, the 100.286 once again is going to be the key breakout level to look for. If we re-accelerate through last week's high, bear in mind there's going to be plenty of stop losses up here from anybody who shorted this news. This is where we can start to see a real liquidation. So going into next week, I want to be bullish still on the US dollar, looking for long opportunities. And that would either be on a continued sell-off, in which case I'd be looking to buy the dip. And again, we'll look at the specific buy and sell zones in the currency pairs as we go through the video. But I will be looking overall to buy the dip in the dollar on any push lower. And if we get FOMC coming out and this just does nothing into FOMC, I will be looking for that bullish catalyst and the break through the 100.286 and the liquidation of any shorts who are involved here from the news of the US-Iran ceasefire deal. Okay, so let's have a look at the portfolio selection heading into next week. And the first thing that stands out is there is no outstanding bullish currency or bearish currency heading into next week. This is really showing complete indecision in the foreign exchange markets, and it's not a surprise because we have 5 interest rate decisions next week, including the BOJ, who are expected to raise rates. And we are going to look at some breakout trades in the yen in today's video as well, because I do think we could actually start to see the yen really picking up steam heading into next week off of the back of this BOJ rate hike. But very often we will see complete indecision with no real leaders or laggards in the foreign exchange market ahead of key inflection points in the markets. So going into next week, we are looking at the portfolio selection, but we have to add in the context of the type of week that it is with the 5 interest rate decisions. So one of the things we can do is, even though there's indecision now, we can kind of think back and track where the currencies have been and where they are now. And we have seen money coming out of the commodity currencies, and we've been seeing this kind of risk off creeping into foreign exchange. So on that basis, and on the basis that we've already discussed that the Federal Reserve are expected to raise rates, not in this meeting, but at some point this year. And there is that risk for a kind of more hawkish rhetoric coming out of FOMC. So one of the things we can do, even though there's no real clear signal here in the portfolio selection this week, we can think back to where the currencies were previously and also overlay that with the context of what we have coming up next week. So one of the things we know is that we've been seeing risk off creeping in. We've been seeing the commodity currencies underperform. The CAD is neutral, but the Canadian economy is in recession. So on balance, I do still favor looking at those risk off setups. And to the long side, as we've already discussed, I will be looking primarily for USD long opportunities, whether that's buying the dip from the buy and sell zones or waiting for FOMC and looking for that catalyzed breakout above the key resistance, highlighting last week's video and where we got the failure on the US-Iran peace deal from. So I do like US dollar to the long side heading into next week. To the short side, I'm going to be looking at the Aussie, the New Zealand, and the CAD. And that's because these are the commodity currencies which are starting to suffer. The Japanese yen has been weak, but it's actually starting to strengthen. And we have the BOJ raising rates next week, most likely. So I don't want to be shorting the yen. And the Swiss franc is actually a safe haven currency. So I don't really want to be shorting this either, even though maybe for 1 week you could start to look at Swiss franc shorts because quantitatively it is actually the weakest currency. And in fact, last week we saw multiple currencies actually strengthening against the Swiss franc. But for me personally, heading into next week, I'm going to be looking at that risk off template, which is simply the US dollar to the long side and the EU majors to the long side as well, versus primarily the commodity currencies, which is going to be the Australian dollar, the New Zealand dollar, and the Canadian dollar. So we'll be looking at all of the US dollar pairs as normal, but we'll also look at EurCad to the upside, Euro New Zealand to the upside, EurAusd to the upside. We're also going to look at pound CAD to the upside, pound New Zealand to the upside, pound Aussie to the upside. And we'll also look at CAD yen to the downside for a potential breakout on the BOJ, and also New Zealand yen to the downside on a potential breakout from a rate hike from the BOJ next week. Don't forget, guys, if you enjoy these videos or you feel you get any value whatsoever out of them, be sure to like, share, and especially to subscribe. You can also, as always, hype the video if you're on mobile as well. It really helps the channel when you do that. And to all of you who do that on a regular basis, I want to say a big thank you to every single one of you. Okay, so kicking off the Forex pairs with Euro Dollar. Now, again, for those of you who are new to the channel, this is the sell zone between these two levels, and this is the buy zone. And we're looking at these for each of the markets in foreign exchange. And essentially what this means is once we enter the sell zone, we are overbought on the week. And when we enter the buy zone, we are oversold on the week. And generally speaking, we're looking to sell from the sell zone in weak markets, and we're looking to buy from the buy zone in strong markets. So quite clearly, even though we had that kind of whipsaw to the upside on the news of the US-Iran ceasefire deal, this has not changed the trend. The trend is still to the downside, and as it currently stands, we should be treating this as some volatility. Really nothing else than that as it currently stands. So the big event is going to be FOMC next week, and what I would like to see is if we can get a pullback into the sell zone, especially if we can test this key area of resistance. So one of the things we're looking for is in a weak market, we pull back, we enter the sell zone, which means we're overbought during the week in a market we're looking to be short. And at the same time, we have confluence with perhaps, in this case, a prior resistance level, or it could even be a trend line. In fact, there's both right in this area. We'll go and look at the multi-charts now. You'll see there's a really nice area of confluence just here. If we get that opportunity for a pullback before or after FOMC in euro dollar. Either way, I can only be short euro dollar or do nothing. I cannot buy euro dollar next week. So if we look at the multi-charts, and I just want to bring your attention to the daily and the 4 hours first of all, because this is the area where we have this descending trend line. And right in here, we've got the sell zone at the 1.16567. So as soon as we trade above the 1.16567 next week, we are overbought during the week. So what that basically means is statistically, you have roughly a 70% chance of pausing in this area or actually reversing back inside the range. So this is the key area for a kind of sell the rip opportunity I'd be looking for specifically right here in euro dollar. However, if we just do nothing, let's say we just move sideways going into FOMC, because very often when you have a big interest rate decision, you tend to get the market not doing anything. So I would not be surprised to see this market doing pretty much nothing into FOMC. If FOMC comes and we either get, let's say we get a bit of a nothing outcome and we just start to see profit taking coming in and we see this drift higher after FOMC, this would be a great place to sell that rip after FOMC, Thursday, maybe even into Friday. But if we move sideways and we get a bullish catalyst from FOMC, then I really would be looking at last week's low as the major breakout level, because if you can't have a look, this is the bear flag breakout down here as well. And we have a bigger head and shoulders breakout level just below it down here. So one of the things you'll see is if I zoom out here a little bit, you will see we've got this kind of setup where we broke down below the 50 period moving average and we've tried to reclaim it on a weekly time horizon. Notice how once we did that over here, we held the lows and we rallied. And if you fail, once you pull back, if you fail to actually reclaim this and you start to break back down below the lows, you can actually get quite a steep liquidation, because there's going to be traders who bought in, especially on this news, and they're looking for this bounce from the 50 period moving average in the weekly. So once we take out last week's lows, if we take them out on a more hawkish FOMC, I would anticipate those that bought last week to be pulling their stop losses. And I think we could see this coming down to the major breakout level of the 1.1413 heading into next week post FOMC. So those are two things I'm looking for. I'm looking for a potential sell the rip opportunity up here. But if we go into FOMC and it moves sideways, I would look for that dollar bullish breakout off of FOMC. And don't forget, when you have an interest rate decision, you can see these doing 2 standard deviation weeks. In other words, you're not just going to go down to the first lower bound, you'll go down to the second gold level that we just looked at in the hedge dash platform here. So euro dollar short will do nothing for me heading into next week. Next is pound dollar. Now again, zoom out, take a step back, look at the bigger picture, because despite this update on Friday, we are still in a significant bearish pattern and the overall trend is starting to reverse to the downside. The trend has not yet reversed until or unless we take out these lows. But we've made a lower high in this case. And not only have we made a lower high here, so 1, 2, within the lower high, we've actually started to make lower highs as well. So we have a situation again where we have this low down here as a major breakout level. And once we get that liquidation there, that's going to take us to a second liquidation point. And again, this causes that kind of cascading effect where you get the bigger moves in foreign exchange markets or in any market. And normally to get that, you need a catalyst. Is there a potential catalyst coming up? Absolutely. FOMC next week. The number one catalyst, probably outside of CPI, that can cause these major patterns to break. So looking for the same thing, going to be looking for a pullback into the sell zone. Look at how this really nicely stair steps this low here, and it would basically be the top of the range here in this kind of sideways pattern. So a really nice potential opportunity to sell the rip above the 1.35192. And if we just go nowhere like this and we get FOMC and the dollar starts to really take off, this is the breakout level down here that I would be looking for. And again, the 1.3180, this can easily be achieved next week, because in an interest rate decision week, you can actually go to the gold levels here. So you can do 2 standard deviations instead of 1. So let's have a look at the multi-charts. You can see this was the low over here. So we've got this kind of week over here where we have this inside week. We break down out of this inside week, which of course is consolidation, and any kind of pullback here would be to retest the inside candle low. This would be a really nice place to look for that short. And even if I got the opportunity to sell the rip, there is the chance that you can hold on to this for the bigger swing trade, because the breakout level down here can still be achieved over the next couple of weeks. So there's quite a few options going into next week, but I would and am still focused on the potential to catch the bigger breakout in the dollar index. So if we just go sideways into FOMC, what you want to do is be on the lookout for that bullish outcome for the dollar, because if we start to see the dollar catalyzed with strength, the 1.33025 is a major breakout level. This is a big bear flag, and I was looking to anticipate a breakdown here and that breakout in the dollar index itself last week, but this is still in play. I mean, 1 day up really is nothing. Yes, we basically saw some of the shorts covering their positions, and I was one of them in some of the other markets. But you see here that this is really nothing in the grand scheme of things. The big risk is still for the breakout to the downside, especially if we get a bullish outcome from FOMC. So I'm taking dollar shorts completely off the table next week. I have no interest in shorting it. If we have an exceptionally bearish outcome from FOMC, then I probably won't participate at all. So I'm either looking to sell the rip on a kind of neutral outcome or looking for the breakout on a bullish outcome. Next is US dollar CAD. The Canadian economy is currently in recession. I have no interest in shorting this market. What I want to see is I ideally want to see a pullback into prior daily support, which also sits right at the buy zone and sits right at the 20 period moving average in the daily time horizon. So this becomes a dip and flip setup as we cover in the free strategy guide in the pinned comment and in the description below. However, because of everything we've discussed and the potential for a bigger dollar breakout, this is absolutely one of those situations where you could look for a bigger swing trade through the highs and further. And you could look for that more positional trade, which you could hold for even weeks. Why? Because the dollar itself is on the verge of a much bigger breakout. And if we come and have a look at the multi-charts, you can see we already have broken out of a major weekly pattern here. So even though the DXY itself failed, US dollar CAD as a currency pair hasn't failed. It's broken through the major inverse head and shoulders high, and it actually closed the week above the high. So again, all of this context just to show that what happened on Friday is not necessarily game changing. And as it stands, we should be treating that more as volatility rather than a directional signal. So I would really like to see US dollar CAD coming back, an opportunity to buy the dip down in this area. And it does look like we are now heading up to the 1.4140 next. Next is New Zealand dollar. Now, I do really like New Zealand dollar to the short side heading into next week. We've got this big bear flag setting up, and in New Zealand dollar, we had a 2 standard deviation week to the upside and a 2 standard deviation week to the downside. That is extremely rare, and the idea of getting a third 2 standard deviation week to the upside to take out the highs is so low probability that it does actually increase the attractiveness of New Zealand dollar to the short side for me, especially if we get that bullish outcome for the dollar on FOMC next week. So we get that catalyst. So what I'm going to be looking for is a pullback into the sell zone. Now, the issue is there's no real, this is such a strong move that there's no real confluence here to short against if we do push into the sell zone. Normally, I look for price to make its own high, so it would push in, and then usually the second push, because it's created a high already, that would be what I would look for in order to time a potential short. But as we go over to the multi-charts now, you will see a break down below this low does set up a potential bigger breakout to the downside after FOMC. So if we look at the multi-charts, you can see the sell zone is at the 0.58997. So on the 4-hour time frame, if we push into here, because of the lack of daily resistance, I would look for that double top. So I'd look for a resistance area to form here, and then I'd look for a trade into it for the potential short. However, I suspect that we're probably just going to do nothing into FOMC. That's my guess. And then most likely, or at least I'm anticipating, but it's not guaranteed, that we get that bullish dollar outcome from FOMC. If that happens, so it's an if-then process, and we start to see this really accelerating back down to last week's low. Last week's low is where all the stop losses will be after the US-Iran ceasefire deal was announced. And if we take out the low of this engulfing daily candle, I think we're going to see a pretty strong liquidation down to the next key area of support here at the 0.56792. We also have, don't forget, this kind of megaphone pattern, which overall is a bearish pattern. It's the same pattern that brought down Bitcoin recently, same pattern that brought down the S&P. And you tend to see 1, 2, 3, 4, 5, and then down at the 5th, it kind of stalls out, moves sideways, and then you get the next sell-off. So we also have a pretty bearish technical pattern here setting up heading into that FOMC meeting next week. Next is Aussie dollar. Now, we also have an Australian interest rate decision next week on Tuesday. So what I'm going to do is I'm going to wait still for FOMC, especially if looking at Aussie dollar. I think FOMC is really the big one we need to pay attention to next week. So what I'd like to see this push up. Perhaps this actually pushes up on the RBA and then we get the reversal on FOMC. But you can see we have a nice area of confluence. This would be a third touch of the trend line setup. Third touch of the trend line tends to be an explosive setup in the given direction, in this case to the downside. We also have the higher time frame quantitative data on our side, because once we turn overbought on a rolling monthly basis, just like over here on a rolling weekly basis, we do have to neutralize. And that essentially is downward pressure here on Aussie dollar, just from a higher time frame perspective. So what I'd like to see is a pullback into this area for a third touch of the trend line type setup. Or if this just goes sideways, nothing really happens on the RBA, kind of moves sideways, and then we get FOMC, it would be a breakout of last week's low again, where I believe all of the stop losses will be from anybody who sold the US dollar on the news of the US-Iran ceasefire deal. So just to look at the multi-charts, there is the really nice area of confluence between the downward sloping trend line and the sell zone. And although over here it looks like, if we break this, this was last week's move, we're not going to go very far. If you actually come and have a look on the weekly time frame, what this would be doing is we would essentially lose the 20-period moving average. Notice how we came in and held, and then we rallied to new highs. We came in and we've got this reversal. So again, traders are placing stop losses below this week and they're looking to trail stops up. If this gets taken out, we could find our way down to the 50-period moving average pretty quickly. And I've added the second lower bound down here as well. So you can see that in a given week, just in 1 week, if we've got an interest rate decision, we can get to these lower bounds, which are gold, basically a 2 standard deviation week. So we could actually do this in 1 week. We could end up down below the second lower bound, perhaps even taking out this low. I don't suspect we'll actually get much further than that. We may not even come all the way down to the second lower bound, but we absolutely can do that type of move in a week with an interest rate decision. Either way, I can short this market or do nothing. I cannot buy Aussie dollar next week under any circumstances. Next is US dollar Swiss franc. Now I do have a bullish bias on this as well, based on the portfolio selection. We have this kind of dip and flip setup here where the moving average is right at the buy zone. So I'd like to see this come down, trade into the buy zone, and I would be looking for a 1 or 2 day bounce here. But this is also where you could capture a potential swing trade through the highs. And as we'll see when we go over to the multi-charts now, this is actually a big ascending triangle pattern in US dollar Swiss franc. So if we come and look at the multi-charts, there's 2 things that I want to highlight. One, the buy zone at the 0.78986 is sitting at the daily moving average, as we discussed. But what I also really like about this, it sits right at the high of the week 1, 2, 3 weeks ago. So a really nice key area of support that we can bounce from just as this market enters the buy zone below the 0.78986. So that would be the opportunity I'd be looking for next week for a 1 or 2 day bounce. However, look at this on the weekly time frame. We have 1, 2, 3, 4, and 4 points make a pattern. So here we've got, and because these two are flat, we have a flat top and we have an ascending bottom. This is an ascending triangle pattern. It's a bullish breakout pattern. So if we do capture any kind of, opportunity down in this area and you were to hold on to it, if you were to time it well, the longer you hold, the more risk you're going to take. But if you were to time it well, you could look for the swing through the ascending triangle pattern. And notice how alongside that dollar index breakout, we have multiple patterns. New Zealand dollar with the megaphone pattern, which is bearish. US dollar Swiss franc with an ascending triangle pattern in the weekly, which is bullish. These patterns are showing up throughout the dollar pairs. It's not just in the DXY. So the technical target for US dollar Swiss franc to the upside, if we do break the high of the ascending triangle, is 0.84769. Because of this, I can only be a buyer of this market next week. And ideally, as last week showed, where we failed right on the breakout level, ideally you want to be getting into these markets before the breakout. And so if you do have a big kind of washout on the actual level itself, if you're entered down here, you can scratch the position for a break even, or you'll take a smaller loss than if you actually entered right on the breakout level itself. And the final US dollar pair we're going to look at is US dollar yen before we move on to Bitcoin and Ethereum. And US dollar yen has not been a market that I've really thought is a good opportunity, because the dollar's strong, but if we buy it, we could be on the wrong side of BOJ intervention. And if we sell it, well, we're selling a stronger dollar. But going into next week, I think this could be a fantastic market to have in the back pocket as a kind of plan B. And the reason I say that is because this. Let's go and look at the multi-charts, because I'm less interested in the buy and sell zones in this market next week for reasons just discussed. I don't think fading this market, buying into weakness or selling into strength is necessarily a great policy because of the dynamics we've had. But there is a situation next week where the Bank of Japan raises rates and we start to see some strength coming into the Japanese yen, okay? And this starts to push US dollar yen down towards the 159.568, which is the breakout level to the downside here. And in fact, it's the low of the candle from last week in the daily time horizon here. So because this is kind of a sell-off and a bear flag, a break of this low is a potential third wave. But think about this. This is where we could use this market to pivot in either direction next week and maximize our chances of being on the right side of a potential breakout. So if the BOJ comes out and hikes and we get some strength in the yen, if we get the Federal Reserve coming out and there's a bullish outcome for the dollar, we can skip this and we can start to look at other yen pairs such as CAD yen and New Zealand yen for downside breakouts, which we're going to cover in today's video. But if for whatever reason the opposite happens, we can still potentially trade a breakout in the yen pairs in US dollar yen. So if the Federal Reserve comes out and they have an extremely bearish outcome for the dollar for whatever reason, then this would be the market we could actually short the dollar against and still be trading in the direction of the pattern itself. Whereas the other dollar pairs, we would actually be trading against those patterns. So I would be looking for a potential breakdown of the 159.56, but only if we get a bullish outcome from the BOJ early next week. And then on Wednesday, we get a super bearish outcome from FOMC. That's when I would potentially look at US dollar yen to the downside and a break of last week's low. Okay, so let's have a look at Bitcoin, Ethereum heading into next week. And what do we have here in Bitcoin? We have yet another, basically a flag pattern. You know, we've got this nice trending up channel. We saw the same here. We saw the same here. And each time, what did we do? We consolidated. It was a consolidation. And you can see again in the form, look at the difference in the candles. 1, 2, 3 strong candles down. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. We barely even take out the third lower candle here. This is momentum. This is consolidation. Momentum. And then in this case, we have a lot more candles, but we still only retrace back to about halfway. So again, you can see momentum, consolidation. What do we have here? Big momentum to the downside, and now we have consolidation. So going into next week, I would be looking for a bigger breakout to the downside in Bitcoin. Most likely if it's going to come probably after FOMC, especially if it coincides with a bullish dollar breakout. And notice how we're actually putting in an inside week. Inside week is a consolidation. So volatility contracts and then it tends to expand. So out of inside weeks, you tend to get bigger breakouts. So if you wanted, because the bear flag low over here is really the key breakout level, but if you wanted to kind of get involved slightly early, a break of the weekly inside candle low at the 63,695 would be the first place to really start to look for momentum to pick up. And I would personally be looking through the lows. And the next key area of support to the downside is the 59,977. Basically, you'd be looking at the 60,000 level in Bitcoin as the next target to the downside. If we can break first and foremost the inside week lows and then below the bear flag lows here in the weekly time horizon. Either way, I cannot buy Bitcoin next week. I can only short Bitcoin. Moving on to Ethereum, basically the exact same setup. We've got this flag forming once again. You know, perhaps it comes up and takes out the top, which is this kind of A, B, and a C. But ultimately, the breakout would be below the inside week low, which is the 1600 level roughly. The next target to the downside would be the bear flag low overall. But if we break out of the inside week low, I think there's a very good chance we start to make our way down to the next key area of support, which is this monthly low here. And so I would be looking down towards the 1383.26 as the next key target to the downside in Ethereum. Again, either way, I cannot buy Ethereum next week. I can only establish short positions in Ethereum next week. Okay, so let's now look at the non-US dollar Forex pairs, which are at the top of my watch list heading into next week. Now, these might be non-US dollar pairs, but they are intrinsically linked to the dollar because if we get that dollar bullish breakout, which the US dollar is still right on the verge of, then this is going to bring risk off flows into Forex. When that happens, you tend to see the safe havens outperforming the EU majors, so safe havens, the yen, the franc, and also the US dollar. outperforming the EU majors, the euro and the pound. And the EU majors, the euro and the pound, tend to outperform the commodity currencies, the Aussie, the CAD, and the New Zealand. So I would like to see this pulling back. If we enter the buy zone, which is the 1.60905, this is going to be a great place. Not only is it a dip and flip from the moving average in the buy zone, but we also have this ascending trend line. Again, it would be a third touch of the trend line setup. When you take out the highs, that can be an explosive move. All of this fits with this idea of bigger risk off coming to Forex and a bigger dollar breakout. Not only would this be in and of itself a third touch of the trend line breakout, but look at this. This would also be a new trend change because we have a higher low over here. So we're getting some major patterns setting up for risk off heading into next week, and I do not want to be on the wrong side of them. Next is pound CAD. So we're starting with the CAD pairs because the Canadian economy is in recession. So this is an absolute short as it currently stands. Any kind of pullback into the buy zone is a dip and flip setup from the moving average. The buy zone starts at the 1.8620, and there's a really nice daily support down here as well. Now, look at the multi-charts heading into next week. And specifically, let me draw your attention to the monthly time horizon. This is not something you want to be on the wrong side of, guys. The Canadian economy is in recession. The CAD is going to weaken. You know, maybe it pops up and down near term, but overall, this is going to be a currency which has to act as the release valve because the economy is in recession. And relatively speaking, the Bank of Canada cannot be as tight in terms of policy as its peers. This is going to lead to a bigger breakout here. And this is a big monthly bull flag in pound CAD. A breakout to the upside is risk off. It's also consistent with a stronger dollar. So I do not want to be on the wrong side of this. This is an absolute no short for me under any circumstances. And any opportunity to buy the dip, especially below the 1.86203, this could also potentially be held as a bigger swing trade because of the pattern setting up over here in the monthly. And the key level would be this, which is actually last year's high. We're looking at yearly candles here. Once we take out this yearly high from last year, which is not that far away, and if you want me to be specific, it's at the 1.89148. This sets up a potential rally into year end because once we clear out last year's high, this is actually going to clear the way for a run for the rest of the year in pound CAD. All of this is pointing towards risk off in Forex markets. Next is EurAusd. This is a buy or do nothing for me. Again, in risk off, EU majors outperform commodity currencies. We've already had a trend change, so you have to put all of this together. It's not just that we've got these big patterns in the DXY, in New Zealand dollar, in euro dollar. We also have the other currencies in Forex, which are starting to reverse trends in the direction of risk off as well. So it's putting all of those pieces of the puzzle together to suggest, and then overlaying it on the fundamentals we looked at the start of the video with the bond market, that we are going to see further upside in EurAusd. So any pullback into the buy zone is also a potential third touch of the trend line setup, which is a major trend reversing pattern. And this is below the 1.6301. So this is what I'll be looking for next week. I can only be a buyer of EurAusd. I cannot sell this market under any circumstances. GbpAud setting up basically the same. We're getting this risk off trend change and we're now making higher highs. We should anticipate the high low, and this would be a third touch of the trend line setup as well. Any kind of dip into this area, this is where I'd be looking for a potential buy. 1 or 2 day reversal would be the short-term target. But again, if you hold on to this for a swing trade, this is the type of pattern. If it breaks the highs, you could at least, I would imagine, see it coming up to here. Maybe not next week, maybe it needs a couple of weeks to do that, but that would be a bigger breakout and that can easily turn into a bigger swing trade. Either way, I can only buy pound Aussie, and ideally, this is where I'd be looking to buy it next week. Next is Euro New Zealand. This is a buy or do nothing for me. Euro New Zealand to the upside is risk on, is consistent with a stronger dollar, and what pattern are we seeing here? A inverse head and shoulders pattern. We have the neckline, and that's defined by this kind of V bottom where we got this big liquidation down and then a big liquidation to the upside. The buy zone sits right at the left shoulder. So any pullback into the buy zone of the 1.9673, this also sets up a really nice opportunity to buy from support, which is the left shoulder, that textbook head and shoulders. You can look for the 1 or 2 day reversal back towards the moving average. Or again, I mean, this is something you could hold but just because you hold it doesn't mean the bigger pattern will work, but it is definitely something that you could hold for the potential of a bigger breakout here, which would be that inverse head and shoulders. That would be a third wave and should be the start of a new trend if we take out this high next week. So if we get a bullish outcome from FOMC, I would expect these EU majors versus commodity currency pairs to also start to break higher as the dollar goes higher as well. Next is pound New Zealand. This is also a long or do nothing for me. I cannot sell this market. We also are in the stages of developing this inverse head and shoulders, momentum down, momentum up. And so I would be looking for a pullback into the buy zone at the 2.2791. This isn't as textbook or as clear as the Euro New Zealand setup we just looked at because the left shoulder is all the way down here. But if we jump over to the multi-charts, there is a decent level of support, which is this weekly low right over here at the 2.27701. So if we do get this pullback, and again, this could be off of the back of RBA early in the week, it could cause some money to come in or out of the New Zealand dollar as well. It may just be, you know, this market sells off on profit taking ahead of FOMC, whatever. For whatever reason, if we get this market pulling back into the buy zone and testing the 2.27701, then I will be looking for a potential buy the dip in this area for at least a 1 or 2 day reversal. But again, if you look at this in the bigger picture, this is actually a monthly bull flag, and this would be the right shoulder. Break of this could very easily turn this into a third wave to the upside. Okay, so we're going to stay on the multi-charts here to look at the final two Forex pairs before we move on to crude oil, gold, and silver. And the yen pairs that I like the best for potential breakdowns on a rate hike from the BOJ next week are the CAD yen pair and also the New Zealand yen pair. Why CAD yen first and foremost? Because the Canadian economy is in recession. And so this is putting a ceiling essentially on the Canadian dollar because of the lack of ability to tighten fiscal and monetary policy in Canada. So what you'll also notice about CAD yen and New Zealand yen is both of these are not at new highs, or they're not pushing monthly highs. That means if we get a reversal in these pairs, these will actually form lower highs rather than something like US dollar yen, which would essentially be more of a double top. So for that reason, technically, I like these as well. So the major breakout level in CAD yen next week is the 113.912. And what you'll notice is we've already had an inside month. What does that mean? Contraction of volatility. What follows contraction of volatility? Expansion of volatility. So if we break down, and you could, I mean, if you wanted to, you could look for a kind of break of the inside month low, kind of like we looked at in Bitcoin, Ethereum. But the actual low is the 113.912, because if this is a wave 1 and all of this is a wave 2 correction, the stop losses, although you could look for the breakout below the inside month, the stop losses are most likely going to be down at the 113.90, let's say, or just under here. So that's what I'd be looking for in CAD yen. If we do break out of this, it is going to be head and shoulders reversal. It will be a, you can see here, bigger breakdown, most likely towards at least the 50-period moving average in the weekly. However, the key here, once again, is that if this really is a lower high, we should anticipate this actually coming back down to the prior low, because that's what happens. Whether it's an A, B, and a C and it continues, or a 1, 2, 3 and it sells off, either way, notice how both times it comes back down to the prior low. So there is quite a bit of downside potential here. If you are looking for a potential breakout trade on the BOJ next week, it would be CAD yen at the top of my list for a potential yen long opportunity next week. So the final Forex pair we're going to look at is New Zealand yen. Again, notice how this is a lower high. So any kind of breakdown here, and the reason I'm highlighting the 92.55 is because we have this momentum up, momentum down. So again, this is characteristic of a head and shoulders reversal. We saw pretty much the same thing in all of the New Zealand pairs. And the stop losses would be down at the 92.55. That would make that the breakout level. And this would be the 1 because it's momentum, 1. And any breakdown below here would kickstart the new trend change to the downside. And that's where you can see the third wave. And again, notice if we start to fail down below here, you would expect it at least back to this low. But this would become that kind of cascading effect where we get the double top in the weekly, and you would expect it to come back down to the prior low in the monthly time horizon as well, 79.80. So plenty of room to the downside, but this kind of breakout does most likely need a real yen bullish catalyst. And the great thing about the BOJ next week is that the BOJ do actually want the yen to strengthen. So there is every chance that we do get a yen bullish catalyst out of the BOJ next week. Okay, so let's have a look at crude oil before we move on to gold and silver. This is a major bullish pattern in crude oil, but we've just had the announcement of a potential US-Iran ceasefire deal, which is a bearish catalyst for crude oil. So going into next week, I do think that catalyst takes precedent in crude oil. And I do think we're most likely coming down at least now to the 82.59. So the only real opportunity here, as it currently stands in crude oil, I think would be to look for a pullback, a retest of this kind of pennant low. And that would be, coinciding with the 50 period moving average. And that would be the opportunity to look for that kind of rip and sell off down to the 82.59. Below there, interestingly, the weekly lower bound next week is sitting exactly at the monthly lower bound, which is the 78 handle roughly. So there is every chance if we do break through here, we can go down to the 78, but then we've only got roughly a 30% chance for the rest of the month of moving below 78 with any kind of significance. So those are the two targets I would be looking at to the downside heading to next week in crude oil. Okay, so wrapping up the video with gold and silver. I do have a bearish bias on both gold and silver. We've actually just started to confirm this descending triangle breakout in gold. Again, we've got 1, 2, 3, 4 points, which actually make this descending triangle pattern. The downside target on this pattern is the 3,207.53. And don't forget, for those of you who have been following the channel for a while, the first thing, or one of the first things we said this year, is that the dollar is likely to have an up year, potentially a substantial up year. Gold and silver are in all probability going to have down years. And we said this in the videos and also emailed to all of our subscribers. And the reason is because of the rally we saw last year in gold and silver. When you get that type of a rally, statistically, it tends to be followed by at least a flat year, but usually a decent down year in gold and silver and an up year in the dollar. So when we're talking about a bullish dollar breakout as well, potentially next week on a bullish kind of FOMC catalyst, this is all within the context of those stats, which are showing the dollar is most likely going to end up higher this year, and also gold and silver to the downside. So going into next week, we did trade into the 4099.02, which I highlighted as the next target down on this kind of breakout. The only issue here is there is a support level here. So any kind of short would be trading into it. You could look for the short, and look for it to break. If you want to be more conservative, the better opportunity is probably to wait for the break through the 409, look for the retest, and then a move down to the 3880. And the reason is because that is the monthly 20 period moving average. So at least in the near term, I would expect at least a bit of a bounce potentially from the monthly 20 period moving average at the 3880. Out of gold and silver, I usually prefer to short silver when I have a bearish bias on both, and I prefer to buy gold when I have a bullish bias on both. Okay, so wrapping up the video with silver, I have a bearish bias on silver. We've just traded into the bottom of the descending triangle pattern in silver. Again, descending triangle because we've got 1, 2, and then we have 3, 4. And we have this kind of flat, and we're making, in this case, a high and a lower high. So again, conservative trade here, the more aggressive trade would be to trade it into the support and look for the break. But the more conservative trade would be to let it break, pull back and retest broken support as resistance at the 64.00, and then look for the move down to the head and shoulders target, which I highlighted in last week's video. Here's the head and shoulders breakout at the 56.869. So the 56.869 is the next technical target to the downside once we clear out the 64.01. And if I just apply the downside target for the descending triangle in silver, it would actually imply a move back down to the 31.65. I don't know if that's going to happen. That looks like a pretty steep decline, but purely based on the technical target, the target would be the 31.65. So we'll leave that on there. We'll kind of leave it in the back of our minds, but we'll see if we start to work our way towards it. For now, I would focus on the more near-term targets rather than expecting, a massive substantial decline of kind of 50% from here in silver. It's possible. Will we get there? We'll just have to wait and see. Either way, I can only be a seller of silver as it currently stands. I cannot buy silver under any circumstances. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.